What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and trading method we use can be implemented with any company that's traded in the US stock market. So make sure you hit the like button if you enjoy this video. It really helps the channel grow. Thanks to all those who continue to tune in and give us the thumbs up. If you haven't already, make sure you hit that subscribe button and the notification bell. That way you're really notified when we release new videos. We do release bonus content from time to time, but the nightly and weekend videos, like tonight's video, focus on identifying the triggers and targets for trades ranging from intraday scalps and short-term trades all the way up to swings and long-term leaps. So if you want a deeper dive into exactly how we set up our charts, make sure you check out that bonus content we were talking about. And if you want more free information about the strat, which is the base of our trading and charting method, you can find more free information in the description of this video. So I encourage you to watch this full video because along with the triggers and targets we give, we also provide some pretty good insight into the price action on all time frames. So with that, let's go ahead and take a look at the agenda for today. We'll go ahead and recap the price action from Friday, November 21st. Then we'll zoom out like we normally do and look at the week, month, quarter, and year. Then we'll take a look at the market maker's expected move for the week of November 28th. And then we'll zoom back in and set the 4-hour markers and the triggers and targets for Monday, November 24th, along with the week of November 28th. And we'll do a quick review of the triggers and targets for the month, quarter, and year. All right, so let's go ahead and look at the intraday price action for Friday, November 21st. And you can see that the levels we had on our chart and talked about the previous day played a major part in today's price action. So just a review of the 4-hour markers we've got that are actually pictured on the screen. We've got the previous low a day, overnight high, and the overnight low, right? So previous high a day is up a bit further. We pushed down overnight, so we did open almost with the gap down, but we opened basically at the previous low a day. Now, some of the honorable mention levels that we have out here are the market maker expected move low for the week. That's in purple, 33.40. A bit higher than that is the market maker's expected move high for the day, which Friday the 21st. And that basically coincides with last month's low, which is this green dashed line up at the top of the chart. At the bottom of the chart, we have the market maker's expected move low at 27.74. That's the market maker's expected move low for Friday, and we have the year flip. So this 28.13, this red dashed line, that's the year flip for 2025. So if price goes below that level, the year turns red, and you can see that right below that is the gap left from the initial pop out of the basically 24 to 27 range that we were in for 11 weeks back in June through August. So the last honorable mention is the 29.03, which is last quarter's 50% level. You can see how the overnight low basically coincides with that. So the opening print is the first trading price of the day, and that is the last 4-hour marker that we put on the chart. That's the one we have to wait the longest for, which is basically the open of the day. All the other levels are put on pre-market, right, or the prior day. So we can see we have the opening print here at 30.85. Now, if you're not familiar with this channel, early on in the morning, before a trend is really gets chosen, or to get in at the beginning of a trend in the day, at the early parts, right, the very beginning, to try and catch the full move, we look for higher lows at or above this opening print level to get into calls, and we look for lower highs at or below that opening print level to get into puts. Now, if you get into calls, the first target is going to be the overnight high. The second target would be the previous high of day. And if you were to get into puts, obviously the first target would be overnight low, and you would be the first target would be previous low a day, but you would basically be past that at that point, and the next target would be the overnight low. All right. If you were to go past the overnight low, then obviously you would go to the 4-hour and day triggers and targets that we go over, and use those targets for your next exit points. Same with to the upside. If you were to go above previous high day, then you would take a look at the 4-hour and 1-day notes that we have. We'll go over those here in a second. But for just the simple proven and repeatable strategy. It's higher lows at or above opening print, we get into calls. Lower highs at or below opening print, we get into puts. And you get an example of basically both in today's price action. We were able to profit in both directions. Not as much to the downside on intraday. We did have some swings that we left overnight. Those that were really what got us the most profit to the downside, but there was some action to the downside intraday that we were able to capitalize on as well. Oops, get this chart lined up. Come on, there we go. So we opened, we pushed above, and this is on the 5-minute chart. So more scalping perspective. We didn't go down to the 1 minute today like we did yesterday, because we felt we were pretty much at the bottom of the move that we had made over the past couple days. So we were just looking for something on the 5-minute or higher. It's Friday. We don't like to trade too much on Friday unless there's a great setup. So obviously we weren't putting as much money in at the beginning of the day, but even with the small amount of money, you can still profit using that proven strategy, right? So we pushed down, we pushed up and got a lower high, and that's where you could enter puts, right? Once we got this lower high and then the next candle went below that low, then you could have entered right here. We did enter right here, had our stop a little bit above the previous lower high, and for whatever reason we did not get stopped out when we got the push and the poke just above opening print. So I guess we had enough cushion on our stop that we were able to stay in, and we're glad that we did, because it was a higher low. I'm sorry, a higher high from this soft higher low, but it was lower than this soft higher low. I'm sorry, soft higher, lower high. It was higher than this soft lower high, but it was lower than this soft lower high. So it was still kind of like a neutral range and so close to opening print that it's like, the bulls and bears are still fighting over this opening print level. Which way are we going to go? So we were glad the stop didn't get hit, and we were able to stay in. We pushed down, made this lower low at that point, so it had essentially created a broadening formation, right? Oops, not there. If we go from here to here, right? That's our opening broadening formation at the beginning of the day. So once it created that top broadening formation, pushed down, we got the lower low. So that lets us know, well, we go past the 50% level of that broadening formation, but then get the continuation through. That lets us know we're going to probably go see the bottom of that broadening formation. Now, we talked about the big level of support here at the year flip, and the last quarter is 50%, right? So we did keep in mind that we could bounce, and we've talked many times, many videos about how gaps can actually be bounce points, and we not actually fill the gap, but bounce off of them, at least from an intraday perspective. So that's what we got here, right? We pushed down. When we pushed back up and got this higher high here, we got stopped out. So from here to here, not a lot of profit there, right? But we stuck to the rules, and we still were able to pull a little bit of profit out. So if we didn't have the swings overnight, we still would have had minor profit on the downside. Now, what we got is what we were looking for, right? We got a bounce exactly off of the year flip, this 2813 level, which is basically the top of this gap. We got the higher low, and then a second higher low. Once we got the second higher low, we obviously had our stop locked in, but then we were eyeing calls at that point. And once we took that higher low to higher low to the higher high, we went ahead and entered calls. We see we pushed up to overnight high, right? Obviously, once we get back over opening print, things are feeling a little bit more bullish. Everybody's screens have gone from red to green at that point. We hit the overnight high. We see the sideways action, the pullback, and then the bounce off of the opening print for the pushback through the overnight high, and almost retesting the market maker's expected move low for the week, and that market maker's expected move high for the day. So, like I said, we got what we were looking for. We were able to stop out towards the end of the day with this lower high and take a majority of that profit home with us. But we didn't swing anything over the weekend. We do have our January calls that we purchased around the $27 area. So, technically still in profit on the ones that are left. We only have a few left. We took profit on a lot of the $26 calls at the more towards the top of that the latest push that we had up to almost the $50 level. I think it was 49.49. But anyways, so we are still eyeing those 26s. We have stops at even. Again, they're just basically some runners at this point. The 27s that we have still in nice profit. Made those more towards the 20. No, it wasn't even 20. It was like $18 area when we had the 2 to 3 week sideways action after the 7-week push up off of the April 7th low. So those are still looking good. The 2028s that we bought around the $24 level, those are still looking good. So from a long-term perspective, everything like we've talked about before is still okay. Actually, let's go ahead and start zooming out so we can look at that. Just looking at the 4-hour perspective, right? We set the lower high. Let's get a cleaner chart here. Right, we set the lower high here, and I'm sorry, the lower low after this soft lower, goodness gracious, soft lower high to the soft higher high, right, from here to here, but it was still a lower high than this this area here, right, that where we had the double three we talked about previously. So we had a basically a lower high on the 4-hour chart, and then a lower low, right, and that's shown also in this day chart. We had the lower high, and we're now down to the lower low, right? So we're still handling in a downtrend, right? Lower high, lower low on the day, the 4-hour and day chart. Now on the week, on the day though, we did set up pretty nicely for a 3, 2 down, 2 up, right? And that's got a lot of magnitude. Now we are going to be facing a lot of resistance here around those same areas that we talked about before, but yeah, those are going to be. That's going to be a decent move if we get it, even if we don't make the full reversal and reject around here, around this daily downtrend line. That's still a decent move, right? But let's go ahead and continue to zoom out. Let's look at the week chart. Now on the week, we're not in a downtrend, right? But we are approaching the territory of making a lower low, right? Now, since it would be after a higher high, we would just be creating a broadening formation, and it wouldn't necessarily be a downtrend at that point. But once we do finally bounce, we're basically at that point watching for a lower high, right? So if we bounce up, even if we make a higher low here, if we push up, do we reject off of maybe last month's 50%? By then, is it December? And even if we get a great push, do we reject off of last year's 50%, which has acted as a level of resistance for multiple weeks as well? You know, at that point, we're looking for, is the lower high going to get set and a downtrend going to start to be put in? But for the time being, right, this is just the expansion of range after this bull flag that we had here, right? Here's the April 7 low, the push up, the 11 weeks of sideways action between 24 and 28. We get the pop, right? We reach the 100% fib extension right here of that bull flag, and actually all the way up to the 138 fib extension. We've pulled back. We want to see the support on the 38.2. Yes, we've wicked through it, but what does the body of the candle do for us, right? How do we finish off this month? Do we push back up? Does this look more like a hammer candle, maybe even a doji? Does this body stay this size? Do we get the further push down, right? We just want to continue to monitor that. But from the week perspective, we don't have a downtrend still. Now things have broke down much more than we would have wanted it to from a bull's perspective, but you know, we've got to continue to keep everything in check. We're above this 11-week range that we were in still, right? And showing pretty good reaction to that level with the bounce, right? We've got the wick here. So we're still in an okay position from the week perspective, but you know, we've talked about over the last week and a half how the really 2 weeks now, how the sentiment has turned more neutral, right? If we're just looking at the chart, you may feel some, you know, even more bearish just looking at how far it's pulled, but if you know, we keep zoomed out and we keep everything in check, you know, we're all right. We're at a major level of support. Now, if we break through this major level of support, start testing that lower bounce range that we had for these 11 weeks, now we're starting to look into more trouble because obviously we've turned the year red at that point. So the month, quarter, and year will be red. So full time frame continuity to the downside. Got more gaps to the downside. We're back in force with the 1, 2 up, 2 down on the year, right? We'd be in a lot more trouble there. Let's look at the month. Right, from the month perspective, there we go. All we've done is lock in a higher high, right? This was a soft higher high here, a soft high here, and then we've got a solid higher high here, back above this high, back above this high. So we're still in decent shape on the month perspective. If we stay above that 2350 level, then obviously we're just creating a higher low from the month perspective as well. So obviously the more of a neutral tone at this point, but we still got a little bit, but another week of trading. Obviously it's a shortened week with the Thanksgiving holiday, but SOXL can move a lot in a week. So we could push back up, make more of a hammerish candle, and give us a higher probability chance of going 2 up in the next month, month of December. Do we get that Santa Claus rally? Possibly. So could this month just be a higher low? We've got to just be patient and see. Same with the quarter, right? We had a very bullish outlook on the quarter when we triggered the 1 combo 2 down, combo 2 up, right? That had a magnitude of 70.08. So that would have been a big move. Obviously, it wouldn't have happened in just 1 quarter. Probably would have taken 2, possibly 3 quarters, but that is the magnitude of that reversal. Now we're back below the trigger of that reversal, and we're threatening a red inverted hammer on the quarter. If we finish like that, then the probabilities of going 2 down on the quarter are heightened, right? And if we do go 2 down on the quarter, that locks us in as a lower high, and that's coming after a lower low, triggering a downtrend, the start of a downtrend from the quarter perspective. Right, and then the year, we were just talking about. Obviously, we started out not so great with the 1 2 up 2 down, right? But that did give us a higher low on the year chart, right? At least so far. And if we do go 2 up next year, that triggers a 2 down 2 up with that magnitude of that 70.08, and then locks in this as a higher low on the year perspective, coming from a higher high, which just signals the continuation of an uptrend. All right, so. Nothing has totally broken down yet, but we do need to keep an eye on things and make sure that we're either exiting longer positions if the longer or the higher time frame charts are signaling that that's the way that we need to go. But oops, let's get a better chart. But yeah, that's it. We're not totally breaking down at this point. We've still got a good amount of a decent amount of distance that we can go before setting that lower low on that week perspective. And that's the first thing that I'd be looking for, is that lower low, because at that point you're no longer in an uptrend. It is neutralized. You're creating a broadening formation, and we really need to see what could happen next, right? Could easily be more downside, and there's plenty of reason to see more downside, just judging off of the horizontal, the basic levels of support and resistance that you can see just sticking out on the chart when just looking at it, right? You don't need a bunch of levels drawn on there. You can just see them sticking out, right? So that's what we've got from a more zoomed out version view. Let's go ahead and look at the let's get the 4 hour up here, 4 hour, and let's take a look at the market maker's expected move for this coming week, the week of November 28th. Right here, we've got the 4 hour chart, and if we bring up the options chain for SOXL, this is Thinkorswim. If we bring up this options chain and we look at the options for November 28th, we can see over here at the right in parentheses, we've got a plus or minus 4.857. That's the market maker's expected move. So they're expecting plus or minus $4.86 dollars worth of movement in SOXL over the next week. So let's just go to our notes real quick. And we've got 4.86 here in the expected move for the week of 11/24 through 11/28. Now remember, Thursday is going to be the market will be closed for the Thanksgiving holiday, and Friday it closes early at 1 p.m. Eastern. So shortened week, but still a decent expected move of $4.86. Now with the close on Friday, November 21st being 31.73, that $4.86 range gives us $4.86 market maker's expected move. That gives us a range of 36.59 to 28.87. All right, so let's go ahead and mark those on the chart. 36.59, and what was the other one? 28.87. 28.87. Oops, 87. There we go. All right, so we can see that even if we do go below, do go to the market maker's expected move low, then we're still should be within the previous week's range, right? So a decent size move with the plus or minus $4.86, but it would still keep us within last week's price action. So the market makers are expecting an inside week next week, essentially, right? Just want to keep that in mind. Keep those levels on the chart. They're not end all be all, right? They don't. That's not. Price doesn't have to stay within those levels. We saw this week we poked just below the market maker's expected move, but for the most part they are pretty on target about 70% of the time. So you do want to know where those levels are, especially if they coincide with other horizontal levels or broadening formations that you have here, right? So if we get a push up on Monday, Tuesday, do we get the reversal here when we hit the daily downtrend line? Possibly. We can put a little bit more weight into that because we can see the market maker's expected move high intersects with that level around that 36.50 area as well. So could we push up to 36.50 and then move sideways, maybe get a pullback there, setting a lower high on the day chart? Possibly, but that shows that we're a really high probability chance of a reversal would be if we do push up, right? To the downside, the market maker's expected move low basically lines up with last quarter's 50% level, also the year flip and the top of that gap again, right? So that was all support today. Could it remain support tomorrow and through the week? It looks like the market makers expect that to be the case, right? So that's how you can get the market makers expected move. That's how we chart it on our chart. Let's go ahead and zoom in at this point and look at the 4-hour markers and the triggers and targets for Monday, November 24th, right? Here we've got the 4-hour levels on the chart here. We've got previous high day up here at 33.04, previous low day at 28.12 down here. Again, the gap here in this teal box. We've got the overnight high and overnight low. We don't know what those will be until price opens on Monday. So let's just activate this, and let's say overnight high is here, and let's activate this, and let's say overnight low is here on Monday. Now again, the proven and repeatable strategy is taking the higher lows at or above opening print and getting calls, or taking the lower high at or below opening print to get puts, right? So say that's the range for overnight, and say we open up in the middle of the range of the overnight range, somewhere around like the 31.80 level. If we open here and we push up, say we reject off of the overnight high and we pull back, but then we get a higher low at or above this opening print, then we want to get calls, and we're first targeting the overnight high. Obviously not a lot of magnitude there. Second target would be previous high a day. So not a lot of magnitude to the upside if we do open up around this level from just the repeatable strategy. But we do have triggers and targets for the 4-hour and day chart that we'll go over here in a second that can act as our extended targets if we go past that. On the other side of the coin, if we open and we push down, maybe we bounce off of this 38.2 fib of the October range and we push up, but we get a lower high at or below opening print, we want to look to get into puts. First target being the overnight low, second target being previous low a day. All right, so very simple. There's some nuance that you can build into that the more that you've been playing this strategy, and once you've mastered the rules and sticking to the rules, right? So there's some nuance you can throw in there, but for just a easy to follow strategy, it's just higher lows at or above opening print, look to get into calls. Lower highs at or below opening print, look to get into puts. All right, so let's go to more of a longer intraday or a full day trade perspective look. Let's go to the 1-day chart, and we can see, the 4-hour chart first, and we can see we got the 2 down, 2 up on Friday. Did not quite reach magnitude, right? Magnitude would be the high of the candle to the left of this 2 down. So we could get a 2 down combo 2 up on Monday if we push up in that first 4-hour candle of Monday's price action. That magnitude obviously would be the high of the candle to the left of this 2 down. But once we reach that level, that would trigger a 3 combo 2 down, combo 2 up, and the magnitude of that move is the high of the 3, right? So obviously we've got these levels of resistance that we would have to work through, as well as this daily downtrend line that has been respected since what is this, 2 weeks ago, right? Since 2 weeks ago, this daily downtrend line has been respected. So we could see a rejection here, but if we're able to push through that as well, then we've got our magnitude of that move here coinciding basically with this 4-hour downtrend line and the 78.6 fib of the bull flag from the April 7 low. So, even if we have a very explosive Monday, we got to keep in check, what levels we could have rejections at, right? Now, if we continue price action to the downside, setting this as a lower high, if we go 2 down in the first 4-hour candle of Monday, that gives us a 2 up, 2 down. Magnitude of that move is the low of the candle to the left of that 2 up. So obviously the low of Friday, and at that point now we're threatening that gap again. So could we bounce off of there? Possibly, but the more times you test a level, usually the higher percent chance that you are going to break through that level. So if we're pressing that again, we could break through. If it's just to close that gap, hey, we still break through that level, but then the gap is closed and we look for possible gap fill reversal back to the upside. But if we don't get that, then obviously that 2350 is going to be our line in the sand because that's where the lower low on the week gets set, right? Now from the day chart, if you want to look at more of like a full day trade or maybe even an overnight swing, again, we're in position for a 2 down, 2 up, which is a very powerful reversal. At the same time, though, you need to look at the momentum of the downtrend, right? We're dead in the thick of it, right? So it's going to be tough, right? Even if it does trigger, it's going to be tough. We've got to, break through last month's low, the quarter flip the quarterback green, right? The last quarter's high, the market maker's expected move high. We're asking a lot to break out of that and above that, but it is possible, okay? Who knows what type of catalyst we can have next week. Again, it is a short week, so maybe temper how much you think we could go up. It could take a couple of days to fulfill this 3 2 down 2 up. We could get a 3 2 down combo 2 up, maybe combo 2 up, but that is the magnitude for the move if we break above the high of Friday. If we do push back down and break below the low of Friday, right? Obviously we've got the gap fill, and then you're targeting that 2350 level, and we could poke through that to fill this little gap here around 22. All right, let's go to the chart or to the notes real quick so we can just look at the numbers. All right, so this is for Monday, November 24th, and essentially the week of the 28th, right? But anyways, on the 24th, there will be 25 trading days left in the year. The close price on Friday, November 21st was 31.73. We don't know yet what will flip the week green or red because the week's not open, but we know that we need to get all the way up to 49.49 to flip the month back green. The quarter will be a little bit easier to flip back green. It's just at that 34.17 level, so not too far away from 31.73, but we are still red on the quarter. And then, of course, we are close to flipping the year red as well. Again, it's right above that gap that we have there. So if we do go below at 28.13, then now we're in full time frame continuity to the downside where the month, the quarter, and the year are red. All right. We talked about the market maker's expected move being plus or minus $4.86, giving us a range of 36.59 to 28.87. We know where our gaps above and our gaps below are. Always want to keep those in our notes. And then we know that before we get to the 4-hour time frame, if we're looking at scalps, we're looking to get into calls if we get higher lows at or above opening print, and we're looking to get into puts if we get lower highs at or below opening print. Right now, again, just to rehash what we went over from the 4-hour, if we go to the downside, that's a 2 up, 2 down in the first 4-hour candle of Monday. That would trigger at 30.81 with the magnitude of 28.12, and we have an extended target out here of 27.43. Now, if we go back to the upside, that gives us a 2 down, 2 up. I'm sorry, that should be a 2 down combo 2 up. there we go. That wasn't making sense to me. But anyways, it would be a 2 down, combo 2 up, triggering at 33.04 with a magnitude of 34.28. Now, if we reach that 34.28, that then triggers the 3 combo 2 down, combo 2 up with a magnitude of 39.19. So very, very big magnitude, something you would want to be a part of if it were to reach there. But again, we're in the face of a pretty heavy downtrend. So we went ahead and listed the levels that we could see a rejection from, right? Or sideways action at. That's the 4-hour chart. Now from the day chart, we know if we go below Friday's low, that triggers a failed 2 down continuation, triggering at 28.12. And we've got targets of 27.43, 26.93, and extended targets of 25.60 and 24.96. Those are all lower lows, right? Now, if we go to the upside, we talked about how we triggered 3 failed 2 down, 2 up. That gives us, that triggers at 33.04. Again, the magnitude is 39.19, so very, very big magnitude. But again, we've got these levels in between where we could see either rejection or sideways action, right? Let's take a peek at the week chart real quick before we go on with the notes. And again, we can see, let's bring up the week chart. There we go. We can see we can either have a 2 down continuation and threaten this lower low, or we can have a 2 down, 2 up. But again, we're running into this resistance, right? So we go back to the notes on the week. If we go to the downside, that's a 2 down, triggering at 28.12. But that does also trigger just this more waterfall combo 2 up, combo 2 down, right? So we have 2 up, 2 up, 2 up, 2 up, 2 up, 1, but 2 up, 2 up, right? All those 2 ups, that makes a combo 2 up, 2 down. When we reach the low of this, right, that's a combo 2 up, and the combo 2 down has a magnitude here. Once we reach this magnitude, that kicks off another combo 2 up, combo 2 down, right? So if we go back to our notes, again to the downside, the trigger is 28.12. And then the target or magnitudes of those combo 2 up, combo 2 downs are listed here, starting at 26.57, going down below that 23.50 level to that 20.28. If we go to the upside, we're setting a higher low on the week perspective. That gives us a 2 down, 2 up. That triggers at 40.08, so quite a ways to go before that would be triggered. And then the magnitude would be 45.52. We do have extended targets listed here if things really get to running. So pay attention to those if we reach that 45.52 level, right? Now again, on the month, we won't go back to the month, quarter, and year charts. We went over those earlier, and nothing has really changed. We're still in a 2 up, 2 down in force, right? That triggered at 33.98. We did already reach 2 of the targets on the way to the magnitude of that 23.80, but we still have some more on the way to that. Now, the reason why I have those intermediate levels, even though we are in a downtrend, is because of the level of support that we're in. These were all levels in that 24 to 28 range that we were in for 11 weeks. So any of those could be a level of support. But the ultimate magnitude for that move is 23.80. Now, if we are going to pull off a green 3 on the month or a bullish engulfing candle, got to get back up to that 50.76 level. So don't know that we'll make it in that last week of November, but the trigger is out there. We've got to make sure we're ready in both directions, right? Again, on the quarter chart, we triggered the 2 down, combo 2 up at 35.49 and reached magnitude at 36.15, which then triggered the 1 combo 2 down, 2 up. But again, we are back below 36.15. We're at 31.73, so back below the trigger for this 1 combo 2 down, combo 2 up. If we do push back above that 36.15, again, that ultimate magnitude of that move is 70.08. Again, it may not happen in just one quarter. It may take multiple quarters. But because we have such a big magnitude so far to go, we do have these important intermediate targets on the way up to that 70.08. The key, though, is getting back above that 36.15. Otherwise, we really got to watch because if we end the quarter how we look now, there's a high probability chance that we go 2 down at the beginning of or the first quarter of 2026, which would lock in a lower high on the quarter perspective. So again, neutralized but not bearish. Just want to keep our eye on things. And then on the year, again, we triggered the 1 2 up 2 down earlier on in the year and made a higher low before reversing and pushing back up. But the closer we get to that 23.50 level, the more the higher chance that we have of re-triggering this and possibly trying to go down and see that full magnitude of $6.21. So don't know that that would happen this year. Maybe we get into a 1-2 up combo 2 down in 2026. If things really get that bad, then we start looking at that $6.21 level again. But right now, I think it's pretty safe to say that I don't think we'll get to that level anytime soon. All right, so there you have it. Those are your triggers and targets for everything from a scalping perspective up to the 1-day chart. I hope that this information was beneficial to you or is beneficial to you in the future. Again, we try and just cram in as much information as we can into these videos without taking up too much of your time. So apologies for any rambling if you felt as though we're just trying to give as much information as possible. But at the same time, if we went over something too quickly or if we didn't go over something that you have questions about, definitely let us know in the comments of this video. We do like interacting with our viewers in the comments there. So we always look out for anything that any questions that anyone might have or further explanation, things of that nature. But we will go ahead and wrap up the video. We're taking up enough of your time, so we will end it how we normally do. If you're watching this video on I don't know, even Friday night, Saturday morning, hope you even Sunday morning, hope you enjoy the rest of your weekend. If you're watching this Monday morning, we hope you had an enjoyable weekend and you got some good rest, woke up refreshed and ready to trade, and we look forward to getting out there and trading with you.